There we go.
All right, Owen, welcome. And welcome to the Time for Profit podcast. And so, for all the guests, this is Owen Power. And Owen is the CEO of Power CFO. And Owen works with manufacturing and construction businesses that are growing, but are struggling with inconsistent profit and a lack of visibility into where their cash is going. And, I love that focus, Owen. And I've observed that a lot of businesses really don't have good clarity into where all the money is going, and they grow and their margins shrink, and then they're curious as to why they are experiencing a problem with cash flow, with profitability, when when they look at their top line, they should be making more money. So, love to have you unpack a little bit of how you approach working with those clients, and then we'll just kind of proceed from there.
Awesome. Thanks, Brent. Great to visit with you this morning. Absolutely true. I think the one truism that I discovered early on is that so many business owners literally run their businesses based on the amount of money in their bank account.
Mm-hmm.
So the irony is that they don't have good visibility into their cash flow, yet the cash in the bank is the primary decision driver for them. What we can do, what we can't do. So there's a real disconnect there. And every business is different, right? Every business has different cash flow needs, timing needs. Different industries really impact that. Construction in particular is a wild one when it comes to cash flow.
Mm-hmm.
There's a lot of cash that flows out before the cash starts to flow in. And so
Mm-hmm.
that's a real challenge. Manufacturing can be really hard too because often you have to buy materials up front. And I've seen a lot of cash get stuck in inventory just sitting there.
Mm-hmm.
And then you've got to wait for your customers to pay you. And if they take a little bit longer, it really starts to kill the business. So one of the first things that I do is to really try and understand, what this particular business is in the framework of the industry that it's in. There's certain nuances that you know from the industry that you need to be aware of, but each business is also quite unique. Their cost structure is different, their capital structure is different, and even where they're at, right, is different. New business, very little cash flow. Older business, lots of cash flow, but maybe the timing is off. How much debt do they have?
Mm-hmm.
What other obligations have they got going on? And then the sad thing about business, when they're growing and they're growing fast, they think they should have a lot of cash, but it's the actual growth that really sucks that cash right out of the
Mm-hmm.
business really
Mm-hmm.
quick. So my first step is to always get an assessment of where they're at, and where they want to go to, right? Because that's important. We can
Mm-hmm.
make all sorts of adjustments we like, but if it's putting us on the wrong path, then that's not gonna help them.
Mm-hmm.
So getting an initial assessment in place, understanding where they're at, and then, if necessary, from a cash perspective, putting in place something like a 13-week cash flow forecast that we can see what's coming down the line, where there might be gaps, where they might be dipping into zero. And usually that then takes us down a pathway of what's happening. Can we bring some money in, whether it's through a line of credit? Can we, has the founder got some money they can put in? Is there another investor? What are those capital sources that can help fund, where we are? So it's always important to get a baseline, get a vision of where we want to go, and then with that start to unpack the issues and slowly solve them one by one.
Thank you, and that makes so much sense. I love how you laid that out, because that's something that I've observed too, where it's like, okay, that's the amount of money I've got, but it's not looking at what's coming. It's just what's happening today. So it's kind of that um, firefighter today kind of mentality where you're actually setting yourself up for a real problem soon because you haven't thought it out and strategically planned it forward, right?
Absolutely. And so I developed a kind of a structured process. I've kind of highlighted that or hinted at that. I'm getting in there. The first thing I want to do is I want to understand. I want to understand what's going on. And with that understanding, I can start to diagnose some of the issues, that's happening. Started to see some clues. Maybe it's a margin issue. Maybe it's they've got too much debt on their books. But diagnose what the real issues are underlying it. And at that point, my role really there is to empower the owner to make better business decisions. And so that's my next step, is that I help them decide, where to go. So many owners kind of get stuck in I don't know what to do, right? And they have the decisions right there in front of them, but they're too afraid to make a decision. I remember one of the founders that I worked with was kind of stuck in that cycle. Do we do this or do we do that? Or, what about this? This is a good idea too. And eventually I do calm him down and say, there could be 10 things in front of us over here. 9 of them will probably work out just fine. At this point, we just need to decide, just make a decision based on the best information we have. And it's that next step in the process of when we then execute on that decision, right, that we start to learn whether or not this fully meets our needs, whether it is truly taking us down the pathway to take. And then there's a loop. We'll come back and we might do a new decision, based on what we understand. And that's the improve, part of the framework. Once we start to act, then we can start to improve what we're doing based on the results that we see.
Oh, and that makes so much sense to me. When I'm working with small business owners, I take that same approach, because what I'm hearing you say is you identify where are you and where you want to go, not where could you go, right? Because there's always more than one pathway. But it's like, where are you now? And based on that, what's the path to get from where you are now to where you would really desire to be?
Yeah.
Yeah, and so that resonates, because I like to approach that same thing, because to just go and then have the owner be unhappy because they ended up in the wrong place doesn't make any sense at all. But I've seen that with small businesses, haven't you?
Yeah, absolutely. That I've sat on both sides of that aisle, right? I've been a CFO, I've also been a CEO. And so when I have conversations with clients and prospective clients, I can really empathize what they're going through.
Yeah.
Right? It's the fear of making the wrong decision. It's the fear of going down the wrong path. It's the fear of not hiring enough. It's the fear of not firing somebody that you really should, right? It's all those kind of things. And then you have some owners that are just so invested in their people that they really kind of struggle, and they put themselves on the back, they put themselves last, and that also doesn't always help the business. So yeah, I wouldn't wish entrepreneurship on anyone because it's not always what it seems to be, right? Not everyone is going to be Elon Musk, at some point. Most folks are going to just survive. But it is hard, and it is lonely. That is probably the biggest learning that I had, and especially when I became CEO myself, is just how lonely that role can be.
Yeah, absolutely. And I've seen the situation you described of caring so much about the employees, and I've actually worked with owners who the employees think that they're making a ton of money and that they're just rich.
Right.
And the fact is, they're not even collecting a paycheck. They're pumping money in.
Yeah.
They're taking money from their spouse's income to
Right.
keep the business going, take care of their employees. And because they don't do open books, their employees assume that they're just rolling in cash.
Right. Right.
And Owen, another thing that I appreciate with what you just said is I always encourage small business coaches to just be really upfront and frank with their small business owner clients, because the client needs that, right?
Yeah.
And I like to actually ask the question, what would you do if you weren't afraid?
Right.
Right? And that ties to what you were just saying, doesn't it?
Right. Absolutely. And fear really often comes from not knowing, right? We're afraid of the unknown. And because something is not known to us or visible to us, we have this inert, fear, of what's going to happen. The fear of failure is a big motivating driver for a lot of business owners,
Yeah.
but it also tends to paralyze them a little bit. So, part of what I'm doing through that structured approach that I take is, try and get to some kind of simple dashboard really quickly, that gives some visibility into what's going on. That might be cash flow or margins. So what are some of the key drivers that they might do? But the idea is to help them really focus on what matters most today, what matters most this week, what matters most this month, right? Nothing overwhelming. I've seen so many the one business I walked into had, it was a full page of tiny, tiny little font size print of just hundreds and hundreds of metrics and KPIs. And like, how do you even read this?
Yeah.
What does any of this mean? And it wasn't a surprise to me to learn that nobody paid any attention to those things.
Sure.
And so in that business, when we identified just literally 2 or 3 key things, how much do we have to ship today, as a simple metric, and put that up on a board, on a screen that everybody could see, the company completely changed within a few months.
That's brilliant. And, Owen, what you just said reminds me, I was partnered with someone in a business for a long time where he would say, the way the human brain works, it's 1, 2, 3, many. And once you get to many, it's overwhelming and you do nothing. And that resonates with what you just said there, I think.
Yeah,
So,
absolutely. And cash flow in particular is kind of the one thing where there's so many moving parts. Like you really got to distill it down to the key thing. I've seen cash flow forecasts where they're literally a whole page long of all trying to document every single thing that's got to get paid. And when you start to really crunch that down and say, no, we can group these things together, but what are the 2 or 3 lines that we really need to pay attention to? Payroll would be one of them, right? Let's highlight that number specifically. Then it starts to become so much easier to manage, right? So, cash flow forecasting, can get really complex in its way that we do it. But there was one KPI that I introduced for a business that was struggling with cash. I mean, they just didn't have enough cash in the business. And the line of credit was kind of maxed out, and I knew we needed to do something different. I discovered that the credit manager was being bonused on the number of phone calls he would make, right? The number of phone calls he would make to customers that still owed the money. And on the face of it, hey, what a great bonus structure, right? The more times you reach out to the customer, the more likely you're going to get a check. I mean, it makes complete sense to me, except it wasn't working, right? That something wasn't gelling. So I changed the bonus structure. I changed his KPI. And I said, look, if we're going to do anything successfully here, this month, we need to collect in dollars the same amount that we invoiced last month.
brilliant.
Simple as that. So if we invoiced 100,000 last month, your goal this month is to give me $100,000 in cash by the end of this month, and you will be bonus based on that.
Yeah.
You hit the 100, you get your bonus. You don't hit the 100, you don't get your bonus. You take me over the 100%, well, maybe we'll add a little bit more to what you get. We went from average accounts receivable days of around 60 to 29 within a few months.
That's brilliant. And so, what I'm hearing you say is, as a takeaway for anybody, right, is your key performance indicators should be tied to outcomes, not to
Exactly.
activities.
Excellent. Absolutely. Right. I mean, that's what they are, right? The key performance indicator is how you're performing, and getting to understand, whether it's a leading or a lagging indicator is also important, right? We, as accountants, and I mean, I was guilty of this, in my younger years, you get focused on the financial statements. Let me walk you through your P&L. Let me walk you through your balance sheet. This is what this means. What I didn't realize is I was having that conversation 3 months after that month end.
Oh, sure. Yeah.
It's that set of financials no longer relevant to the business. A lot has changed between now and then. And so that for me is very much a lagging indicator. This is what happened. It's done and dusted. There's nothing we can really do about that. What's coming up next? But that cash collection KPI, that is a very real leading indicator. Because if by mid-month I'm at 30% in that collection target, I know I'm going to have a real problem with my cash at the end of that month. And so now when I do my cash forecast for those next 13 weeks, I know my cash is not going to be, 100,000. It's only going to be probably 70,000. I better adjust that now. Oh, what does that now do to my cash balance? Oh, I'm going to dip below zero here. Hi, Mr. Banker, I'm going to need an advance on my line of credit. And I'm having that conversation before I need it. Because if it takes a couple of days or a week or so to get that sorted out, I don't have the time when I've run out of cash and payroll is due.
Yeah, that's strategic plannings to avoid crisis. And Owen, what you just described strikes me because I'm not an accountant. When I'm working with small business owners, I will look at their financials with them just to see if they're really in a good place or if they need help.
Yeah.
And a lot of times they'll have a bookkeeper or even an accountant. But what is missing is that CFO function where it's more the strategic forward looking, which I really appreciate what you described. And so I think that, and that's one of the reasons I was excited to talk to you today, is I think that a lot of small businesses miss the fact that they can actually have access to CFO level support at an affordable price that's going to actually make them money rather than be an expense, and that's an important factor that that a bookkeeper or an accountant may be really good, but they may really not be equipped to support that business owner with that kind of resource. Would you agree?
Yeah, absolutely. Businesses in the sort of $3 million to $30 million range, a full-time CFO is just overkill, right? I mean, the payroll cost, everything, all the benefits, everything that goes with that, it's just overkill. It's not needed. And frankly, a CFO in those kind of businesses are not really going to add much value every single day, right? And so the fractional model, which has become quite popular over the last few years, is specifically targeted at that group of companies, right? There's some folks that focus on the startups, and I was the CFO of a startup, for a while, and that's a great niche, for people to be in. And they have very specific needs, very specific modeling needs, the ability to talk to investors, raise investment money, etc. So that's a very specific niche. But for most other businesses, 3 million at that point, things start to become enough complexity that they really do need a little bit of outside in look. And that's one of the benefits of fractional CFOs, right? Is that you have the ability to come in objectively. You're still part of the business. You still, really are engaged, but you're able to look from outside in. You're not stuck in the day-to-day, fires that they're fighting, the kind of air on fire urgency that some of these businesses have.
Yeah.
And yeah, when you then actually break that out into an annual salary, what does it cost? Much more affordable, often sometimes even less than what they're paying the controller or the senior accountant that they have. But one of the things that's important, though, is the books still need to be in good shape,
Oh yeah.
right? If you don't have good numbers, no matter how good of a forward-thinking strategic CFO you are, you're just working off the wrong parameters,
You bet.
right? You're just not going to be able to give the right advice. So I do spend often with many clients, a lot of time really digging into the numbers as well, right? To really help them understand. I'm not sitting there doing the bookkeeping. I'm not posting the transactions and stuff. But I'm often digging in and getting to understand where things are being allocated, how to clean that up, how to restructure it. Manufacturing in particular, lots and lots of costs coming in, right? And not all of them get picked up. And I saw that with a business that I started working with where their margin had just been declining for years and years and years, just going down. And the controller couldn't explain it. And his position is that we're just hiring too many people. If we keep hiring all these people, we're never going to be profitable. And while that's a valid statement, it certainly is true. Their business they needed those people, right? They needed people to run the machines. They needed people to fill in shifts. You know, the people are the lifeblood of most businesses, right?
Hmm.
You need people on the ground. But what became clear to me is that not all the costs were finding their way into the individual orders, right?
Hmm.
So when the sales rep would go out, he thought he was quoting at a 40% margin. When in fact, when you put all of those costs into it and made sure that it was fully burdened, they were getting maybe 10%.
Yeah.
A very, very, very big gap.
Yeah.
And so the first few months was spent only exclusively cleaning up the costing. You know,
Hmm.
what costs goes where? Do we have the right overhead rates in here? Do we have the right labor rates in here?
Yeah.
And when we cleaned that up and we then started to present, reports to the sales reps, they could see, oh, on that order, it wasn't a 40% margin, it was a 10% margin.
Yeah.
They went, oh, I better increase my pricing, right?
Right.
And that you never hear that from a sales guy. I don't know if I've ever heard from a sales guy, I need to increase my price to my customer,
Right.
right? But when they realized that they were actually underselling themselves
Hmm. Hmm.
and that they could increase their price and the company could be profitable, their commissions were going to go up as a result,
Yeah.
right? Boom, they were all in. And did they lose any customers? No. Absolutely nobody left them because of that. But in fact, what happened was is that they just grew and grew and grew, and within 3 years, they had record revenues that they'd never seen before, and the company was just exploding.
I love that illustration, Owen, and this is why I always recommend that business owners, CEOs really dial into what you just described. Because first of all, you're building, you're, whether you're the fractional CFO or you're the owner of the business, you're building on a solid foundation
Right,
that's sustainable,
right,
as well as the fact that once you've got that clarity, then you are going to be able to scale and grow your business,
right,
maintain that profitability and those margins.
right,
It really serves everybody well to do that,
right.
right?
And what it also does then is it starts to take the owner or the CEO, whatever they want to call themselves, take them out of that detail and
Hmm.
starts to position them where they really belong,
Right.
which is they're looking ahead. They're looking at how do we grow this business? Where do we go from here? And so once I can get an owner into that position, then we sit down, we say, okay, remember you said to me, this is where you wanted to be in 5 or 10 years. Right, let's map that out now. Let's do a pathway to profitability plan. So
Hmm.
what is that revenue number we need to be at? Right? Because usually I'm saying to them, where do you want to be? It's not so much what the revenue is, where do you want to be as a person? Where do you see this business? And most of them have a dream of being able to, you know, go on more vacations with their family kind of thing.
Yeah. Yeah.
All right. So if we're going to achieve that, what do those numbers now need to start to look like? This
Yeah.
is the revenue. Now we know what we can do from a margin. Okay, so what do the costs need to be to get to that number? I mean, I had an owner that said, I want to have $2 million of net income. I said, great, let's do the math. Let's do the math and figure it out, where that needs to be. You want to have $2 million in 3 years? Okay, let's do it. Let's
Yeah.
figure that out. And then when we did and we arrived at a revenue number, as a result, the leadership team went, oh my gosh, what? You're never going to do that revenue. Are you insane? We said, well, this is the path to profitability. This is the path to 2 million. And so now the big picture numbers came into screen, right? It's not just the 25 million, in 3 years, but what does it look like this year and
Hmm.
next year and in the third year? What do we need to do? What's that pathway,
Yeah.
to get there? And once we mapped that out and then broke it down even to months, now suddenly the business really started to get traction. It
Yeah.
really started to grow. And I'm happy to say in that particular business, after the 3 years, we were well past the 25 million. We were well past the 2 million.
Yeah. I love that. And it's interesting. I didn't realize how aligned you and I were in that specific thing, because when I'm working with businesses, as I said, I don't do what you do, but I also talk about pathway to profit and actually lay out
Mm,
a pathway to profit is what we call it,
right.
where we're taking a look at what is the marketing, the messaging, the
Right.
sales, the operations elements that really support that outcome. Because most business owners didn't start their business to create the biggest, hairiest
Yeah.
job they could.
Yeah.
They wanted to have financial freedom and time freedom.
Right. Right.
And they're so busy in the day to day that they've fallen out of love with their business a lot of times
Right.
because it's such a rat race.
Right. Right.
So this has been great, Owen. I'd like to wrap up with having you do just a little kind of where are we, where are we going? So when you look at the construction and manufacturing sectors, where do you see that right now? And I realize they may be different between the two,
Mm.
but where do you see that right now? What do you see as the biggest challenge and the biggest opportunity?
So interesting thing. When I went into this and said, what kind of business do I want to focus on? Initially for me, I said, manufacturing is I love it. I love walking through a factory. I love seeing things get built,
Hmm.
and have this final product that comes out. And having been a CEO of one of those, I loved walking in Costco and going, oh wait, that's ours. You know, let me tell you a story about how this particular product ended up on this shelf, right? But I had also experience in the construction industry, and it sort of dawned on me one day that, well, what's the difference really between manufacturing and construction? At the end of the day, we're building something,
Hmm.
right? It just
Yep.
so happens in construction, it's a house or an office building. It's on a piece of land, and this is a product on a shelf. It's the same. There are
Hmm.
some nuances from an accounting perspective, but fundamentally at their core, they're very much the same. And so, because of my love for kind of building things, and I love the idea of having manufacturing here locally in the US, and the economic development that comes with it, the jobs, everything else. We can spend hours just obviously talking into that. That just, I wanted to take that passion and just really throw that into those because that's what I loved so much. So the, I mean, the two industries as well do have different nuances in terms of how the economy affects them,
Hmm.
but both remain kind of true to the fact that they're both leading industries as well,
Hmm.
right? And so, what I always found in the manufacturing sector is when the orders were slowing down there, and it's the same with construction. When construction starts to slow down, we have an economic downturn on its way
Hmm. Hmm.
because investor confidence is reducing, and so the investment in those things is coming down, and that means there's going to be a drop off further on, and so true. Every time that's happened, that's been true, and the converse is also true. Every time the orders started to increase, in the manufacturing company, that there's going to be a boom coming up, real
Sure.
quick. COVID turned a lot of that on its head, right? I mean, that really turned things upside down. But once COVID was over, those fundamentals returned, right?
Hmm.
And I saw that. We saw big COVID boosts in a lot of industries. Manufacturing, ironically, was actually one of them. Um, but once we came out of that, orders started to slow down again, and we did see an economic sort of drop off again, after that. So a big spike and then a kind of a little bit of a correction taking
Hmm.
place.
Hmm.
Um, so where we're at right now, what I'm seeing with a lot of my clients is that they're definitely softer, than what they were.
Hmm.
They haven't kind of dropped off. So there's a sense of, I don't know if it's insecurity, but there's a sense of unknown. We're not quite sure, where things where are happening. Um, the orders are not kind of flowing, but they are still flowing. So I'm seeing a lot of flat revenue, across clients. Construction here in Utah, I think, is also, that's also true from different states to different states.
Hmm.
Construction in Utah here is really booming right now, and so we're seeing a lot of housing going up, but that's got a lot to do with the demand for the housing, coming in.
Hmm.
But I'm also seeing across both those sectors, a lot of margin compression. So there's a lot of folks out there that are saying, well, we're not getting as many orders as what we would hope. So there's some folks that are going into the market and they're selling a little bit lower than everybody else to try to catch up. So it's a little uncertainty is what I'm seeing right now in the market. And then that just adds to the overall, complexity for those business owners. So from my business perspective, what we're doing to try and help is we're doing all those fundamentals that we've discussed, from a CFO advisory service. But, I continue to build out partnerships with others, so that we can put good accounting in place, and I have great relationships with bankers and other capital lenders, because those are always important. So trying to build that out. And as I speak with those bankers, I'm finding that, a lot of their underwriters are also being a little more conservative, with their lending. So they're a little stricter. They want to very much see a good 2 years with a good, LTM EBITDA. They're really strict on, this is the debt service coverage ratio we want to see. If you're not there, we're going to wait. We're not going to jump in this. And if we do, we're not going to give you as much money as what, maybe we used to in the past. So there's a lot of that conservativeness happening in the capital markets. But what that's doing is I'm seeing a lot of sort of private money kind of flowing in, kind of privately held funds, that are there, but they're coming in and it's very expensive. And so there's a lot of kind of stuff happening on the ground. So it's very uncertain for a lot of people right now.
Yeah, I've seen that as well. And so I appreciate all of your different perspective, and what you just said to me, it really emphasizes the fundamental of what we've been talking about is people really need to understand where they are, where they're going, what their cash flow, their numbers, and to get the support so they've really got good clarity around how to strategically approach the whole thing.
Yeah.
So Owen, if folks want to get in touch with you, other than of course they can connect with me and I'll make the introduction. What's the best ways for people to catch up with you?
I try to be active on LinkedIn. So if they look for me there, Owen Power, they'll find me. I would suggest Google. Google's always a good way to go. The challenge with Google when you Google me is that you discover that I was a first round NHL hockey draft pick back in the day, and that I play for the Sabres, the Buffalo Sabres. So Google might not be the best way to go, but
But hey, it's out there now.
absolutely. But Owen at powercfo.cpa, is going to be great. That's my direct email. Happy to chat with folks.
Excellent. Owen, thank you so much. I feel like this has been just, a gold mine of good information for folks. I'm sure that people will get a lot of good takeaways. I so appreciate your time and your energy today. So I look forward to further conversations with you down the road.
Thanks, Brent. Loved the conversation.